What's going on, everybody? Michael and Coco here to do some technical analysis on the financial markets. Today has been quite a whirlwind type day. It's 12:23, so the market isn't really closed right now. We still have about 40 minutes left. Today's date is September 23rd. We're going to be looking at the SPX, the Nasdaq, the Dow Jones, and a few other aspects of the market to kind of really determine, hey, where's this market dropping to? Let's get into it. All right, welcome back. Sorry for getting yesterday's video out a little bit late. I noticed that when I did get it out later, there was less people that watched it. Still a lot, but if you want to go back to that video and watch it, it talks about why we're running into this level of resistance and why we kind of saw this pullback take place. We scoped out from the monthly all the way to the 2-hour and the 30-minute time frames to give you a good sense as to where all this resistance is coming from. And we could see that today taking place in the markets. Now I'm going to touch up on those charts again today, and they're going to be linked in the description, as you can see below. And for more intraday alerts, follow me on Twitter or on my Instagram account. Before I hop into it, I just want to share this with you guys. This is not like a paid advertisement in any way, but this book right here is called The Almanack of Naval Ravikant. I can't really pronounce his name, but this book right here is such a good book, and it is free, 100% free. If you download it via PDF or ebook, if you have a Kindle, you can read it 100% for free, and it's a guide to wealth and happiness. And it's just an absolutely amazing book. I'm really enjoying it. Yesterday I read 75 pages at night, and I had a problem putting it down. So highly recommend. The free link to the download is just in the description below for you. I personally highly recommend it. All right, enough about that. Consider that my apology for making a video late yesterday and getting out late. There you go. Okay, so we are going to look at the S&P 500 first. This is what I want to do. First, on the monthly time frame, we bounced from the 5 EMA, and we're still technically above it. The day still has not closed, so we might potentially close above it, but we will see where that takes place. The candle that reformed here, it's now a full bearish engulfing. This is the monthly time frame. We still have 8 days or whatever it is left in the month. So if we close like this, this is setting up for a very scary October, so be very aware and cautious when you're trading long positions. What you need to understand when you're trading long positions right now is you might see a really good stock setup and it might break out, but it might be a false breakout, and that can really trap in traders, especially if you look at this long upper wick right here. That long upper wick on this megaphone pattern where it kind of came above, that right there is traders that got trapped, that are buying that breakout, and potentially they still might be holding that bag when it's the prices all the way down here. So very scary. Pay close attention to that. That's the monthly time frame. I want to zoom in on the week. Here is the weekly time frame. The weekly time frame was looking a little bit stronger. As of today, we are below this fib level, the 32.58 level. That's a 23.6 fib level. Who knows when this pullback is going to, maybe bounce to the upside. Be cautious about what the Fed or Congress could come out with this week. These guys could come out at any moment to potentially, give good news around a stimulus package. And that could just take this market and move to another leg higher. So we got to be very careful with what we're seeing right now. But as of right now, we're seeing a lot of pressure to the downside. On the daily time frame, we were talking just the other day about Thor's hammer, and that looked like a bounce point. Well, we saw continuation, and it came up to just about that area of resistance. And there was a lot of confluence within that area. We had the 5 EMA, we had the 50, and then we had this channel, this resistance line right here that it was kind of a channel within. So that was a back test really today. We didn't quite hit it. 33.30. The bulls needed to recapture that. If you watched yesterday's video, we were talking how important it was for the bulls to have to step up today and recapture those levels. And they tried. They really did try today. But as you can see where we stand right now, this is one big, just completely bearish type candle. It may be potentially an overextended move, and we might see a bounce. But my eye is on 3,200. Other people's and other traders are looking at 32.30. That does make sense for a potential bounce point, but I still feel like there can be just a little bit more shakeout before we potentially see a bounce. So I'm just patiently waiting now till 3,200 to see what takes place. I'm out of all my positions, by the way. I got stopped out of my long positions on my weekly scan. I saw an opportunity today for a short-sided entry. So to make up for my long positions, I entered in short on my small weekly scan portfolio, took a quick scout there, and it really mitigated some of those losses of my long position. So I did good there, and I posted on Twitter. So if you don't follow me there, sometimes I post it, and I try to respond. I'm still trying to figure all this stuff out, to be quite honest. I don't know how to use Twitter. I've been on Twitter since apparently 2009, but I just started using it. So it is what it is. So where can this potentially go now? Well, we're waiting to see where it can drop to. Like I said, this is a big bearish candle, and we might see some continuation through the rest of the week. So we'll see. My eyes are on 3,200, and still, if the bulls step up, they have a lot of work to do with this current downtrend. We're seeing big tech stocks get hit hard, and we're seeing the banking sector, which I'm going to hop into here in a moment, just taking some punches to the face right now. All right, Coco's going to go down, and I'll try to remember for her to say bye. Before we get into the Nasdaq, here is the S&P 500 on the 30-minute time frame. We mapped out all these levels they were all pretty much support. And today, we basically opened up a little bit of a gap higher. We pushed a little bit higher, and then we started moving down. As soon as we started flushing below this 50 period and this level that was support 3,300, that's when I entered into my short position, and I posted on Twitter with screenshots, all that good stuff. It started flushing down, and I wanted to capture up to around this point. Now then we got the bounce from this level that was a support, and then it retested, and then we saw the flush point down. Where are the bulls going to finish, or where's the price action going to finish today? I don't know, but it's important that we recapture 3,250. That would form some type of hammer candle right here, which could lead the bulls into another bounce to retry to capture that 3,300 level. But as I see it, we're seeing support at 3,230. But my eyes, if we break down that 3,200, I feel like something's going to take place or step in at that point. Our RSI indicator is moving into oversold territory, so it's likely to see some sort of a bounce here in probably within tomorrow, but we will see. And if it does bounce and break above this, we're going to retest this level of 3,280, which clearly it held up as a little bit of support multiple times today, and then the other days over here as well. And then we had a resistance right here on this gap. Still have an open gap above us too, so we got to monitor that and you just see what takes place. But overall trend right now in the 30-minute time frame, bearish. 50 sloping down, 200 sloping down, big spread between the two. Careful with your buy the dip moments right here, because they could just be a bunch of failed bounces. When we talked about the Nasdaq 100, which this is the Nasdaq on the daily, we were discussing all the areas of resistance and confluence that was kind of just coming into play. So we had this falling wedge, and the price action yesterday was coming into it. We didn't recapture the 50, but we did recapture the 5 EMA, and clearly the resistance held. This is not a good thing for the bulls. We basically ran into the resistance. We got rejected, so we didn't close above the 50. We didn't close above the 5, and we're heading back down to potentially a lower low, and then maybe potentially we might see some sort of a bounce from there. But the Nasdaq 100, when we mapped it out on the weekly, we were discussing the possibilities of a pull down to this 38.2 fib level, which is 10,284, give or take a little bit right there. But we did come below it this week, and then we retested it. We were above it. That was a good sign, but now we're seeing a little bit pull lower. This could be just ultimately a falling wedge pattern to potentially move itself higher. But look at the MACD. The MACD did cross over. That is bearish right there. It's above zero. So, don't hold too much weight on it. It doesn't mean that the trend is completely changed right now, but it did cross, and it's something to take note of. As far as the support level, I'm looking for the Nasdaq to pull into this range. That would make sense to me, given the context of the monthly charts and what's currently taking place in the economy right now. I feel like, yeah, this kind of pullback makes sense. On the monthly time frame, this big candle right here is now engulfing it again. We don't want to see the bulls, I should say, don't want to see a close like this heading into October. That is just a full bearish engulfing candle, Western outside trading candle on the monthly time frame. That's not a good thing, especially when we see this trend line right here and the previous pullbacks to it were all big, not historical moments. I mean, maybe technically, some of them were, but these were big moments in the economy where we saw these pullbacks to the trend line. So this trend line right here seems to be somewhat important. I'm monitoring. I haven't seen too many people talk about this trend line, but I have a feeling that if we see some continuation to the downside, I feel like this chart is going to pop up way more frequently. The Nasdaq on the 2-hour time frame, this was the channel that we discussed yesterday, and we talked about all the confluence up here as resistance, the upper part of the channel. We had the 200 period moving average, the 50 period moving average. We have this gap, or not really the gap, but if we broke above that, we said that this would be a target area that we could potentially put on a short, but we did not break above it. And, you know, it looks like we're heading lower into that channel to, you know, 10,500, 10,700 range. So monitor this one closely. Right now, as I see it, this is not currently a buy the dip moment. This is a, you know, let's see what happens in the next week, 2 weeks to potentially start seeing if we hit some major areas of support. The way that I see the market right now, and this is important, is you could find out major resistance and major support, and then you could put on more important position sizing on those major areas where you can see more buyers or more sellers step up. But on the intra, you know, week or month or whatever we're talking about here, within that, those major resistance and supports, you can find intermediate term trades, which are like, you know, more shorter term time frames. And you can play the bounces and the patterns within that, but you need to be very careful when you have those positions on. So you can have a net long position, a net short position, and then you could scale out of those positions as the time kind of progresses within these channels. Now, if that makes no sense to you, and you're like, I don't really get that, that's okay. I mean, we'll talk more about that when we hit major levels and so forth. But you know, to keep things simple, just look for major areas of support and major areas of resistance. When we hit those areas, you can place a trade and make sure you have stop losses. And you know, that right there sets itself up for good risk first reward setups. Here is the VIX. I forgot to just bring this up when we were talking about the S&P 500, but we bounced from the 50 and now we're pinned between the 50 and the 200. You know, if we see continuation to the downside, this might just skyrocket up, and our target for this, you know, more shorter term would be around 37 to 40. You know, but right now we broke above it and we're still kind of trending just downwards a little bit here. So obviously the wick came down and touched right around this trend line in the 50. So we're to keep an eye on this one as well, because like I said on the previous videos, we might just see this kind of drift down until we find a level of support for the S&P 500, and then we might see that sort of bounce take place, potentially bringing this in lower to fill some air pockets, but you know, we'll see. Here is the banking index. I keep bringing this up because I just don't see many people talking about it. And you know, if you look at German banks, European banks, they're just getting hammered. I think down 10% in the last couple of trading days I posted and I saw on Twitter. And here we're down 7.7% on the largest 25 US institutions in America. So this is the KBW Bank Index. We broke down through this channel. We are below the 5 EMA. The, you know, crossover here took place. So this is a bearish pattern that we broke down from. The context of the chart is bearish. The Nasdaq is feeling some pressure right now. Man, this just, I feel like there's something bigger brewing that I can't wrap my head around quite yet, but something is flashing red and something is telling my gut that, you know, something weird is happening and they're going to have to step up here soon, Congress, the Fed, or something, to give confidence to the markets to potentially send us higher. But how often and how frequently can they do that until everybody just calls BS on it? Because everything just seems fake and kind of this, you know, illusion that's happening. So like I said previously, you know, monitor it day by day, find areas of support. Just because we're going down doesn't mean that you can't make money in the markets. And going down creates some of the best opportunities in the markets. When we see corrections take place and then level outs, or, you know, we start seeing, you know, bear markets or sideways action, these are all opportunities to find more stocks, more trades. And there's always something that does, you know, perform or outperform the overall markets. And right now, clearly, you know, equities are getting hit a little bit and tech stocks are getting hit and this bank index is getting hit. And I feel like there's going to be some moves taking place. Speaking of moves taking place, let's look at the dollar. Here is the US dollar. I'm using TradingView for this because it hasn't fully loaded on my end of day stock charts because the day's not over for trading. But this was the down channel, right? We broke out above it. and then we consolidated sideways. It was a bull flag, and it was breaking out of a channel. Those are bullish things. It was a bullish trade. We said it looks like it's going to go head higher, but I won't be convinced it's going to move higher until we get above 94. We got above 94 yesterday, and now we're moving even higher. We're coming into this trend line. We broke above it, and we're seeing just more action to the upside. This is putting pressure on gold. It's putting pressure on silver. It's putting pressure on equities. This right here, we've been talking about that we have to watch the dollar because it looked like something was going to take place, and clearly it's taking place. Where can this go to? Well, first off, we mentioned that 96. If we start getting above 96, that right there tells me that we'll see equities, the S&P 500, Nasdaq, probably down another 10%. 5 to 10%. I don't see how they would be able to withstand that pressure to the upside with the US dollar. However, if you scope back a little bit more, we do have 94.66 as a level of resistance. This is a nice breakout. And if you look at a bull flag, the pull pattern right here matches almost the length up to where it's currently going. And typically then you could see some more consolidation take place before one, a breakdown or another breakout. So we might see this slow down here pretty soon. But people that have been trading the dollar on the bull side, bullish perspective of the dollar, they're winning right now. So let's monitor this one closely. Here is the TNX. This is the 10-year Treasury yield. I changed my chart up to the daily on the TNX now. I was looking at the US 10Y, but that was another end of day sort of chart, so it takes forever to load, but we broke out. That's bullish, okay, of this downtrend. Now we've just been pinned between the 7.5 and 6, right around that range. So we've been kind of going sideways, but we are coiling up pretty tightly, and the context is bearish, right? We've been saying the trend is bearish, right? We have the 200 sloping down, the 50 period moving sideways, but the price action is above it, and a big spread between the two. How do you change the trend from being bearish to bullish? You got to change the trades, and the trade right now looks to me as bullish. Right now we're up 1.81%. And if I'm being completely honest, I got out of equities. I can't remember the exact date, but when we started seeing way over extensions, so a few weeks back, just these monster overextensions, I just moved into treasuries because I just knew that volatility was going to be picking up, and I was trying to preach it on the channel here. So my portfolio is really just sitting on the sidelines in cash, gold and silver, which is taking a hit, which we'll get into, and I got a lot of tips or treasuries. So we'll see what takes place, but this right here looks like if we get a breakout of this, we can squeeze higher, and that's short-term bullish, but I still think I'm kind of bearish here. Like, I feel like we're going to suppress these rates over time, and it's we'll see. I'm being speculative, but we have obviously a lot of work to do from the trading perspective in order to change this trend to being bullish. And as I see it, this doesn't look that bullish, but in the short term, we might squeeze higher. Dow Jones on the daily time frame down 476 points right now. We said this looked bearish. We broke out of this ascending triangle or rising wedge, whatever you want to call it. We now could not capture the 50 period, and we did not recapture the 5 EMA. We're heading to the 200 period moving average. That should probably act as some sort of level of support. But that doesn't mean you just go all in, because we might have dead cat bounces. We're looking at the 200 period. That's this kind of zone right down here that we can potentially come to. We might see a bounce from there, but make sure you're monitoring your risk. You got to take profits when you could take profits right now, because we're living in a time where there's so much uncertainty, and at any moment, news could come out that just rockets this market higher or takes the knees out and we head a lot lower. Here is the CPC. I'm not going to re-explain this of what it is. Just know, if it's your first time here, you can go back to my previous videos where I did talk about this. The thumbnail is actually of this chart, and I said, this is a warning sign. This is a sell signal. We crossed above 0.8, okay? And that right there represents a sell signal. It doesn't mean that, the stock market's going to crash. I've said that multiple times. That doesn't mean the crash. It doesn't mean the crash is going to come. But what it did mean is, maybe consider hedging your long positions. Maybe start taking profits or up your stop losses. Now, what happened when it took place? Well, nothing really happened. We saw a little bit of a spike up, then a pullback, and then a spike up, and it was consolidating within that range. But look at the warning that it gave us. Now we're starting to see it pull down through that trend line that we mapped out. So that actually got to be changed to red. I'll try to do that here if I remember. That broke down, and now we're heading to make a lower low. So let's monitor this, see where it goes. This is an end of day index, so this will be updated later on in the day depending on when you watch it. You can click the link in the description to see where it's actually at. And as of right now, you know, it's a good indicator. It worked out for us. So hopefully we listen to this. If you're out there, that you did some of the stuff. If not, like I said, these aren't recommendations, but these are just my personal opinions. And when I see something, you know, I feel strong about it. So when I saw this happen, I started doing what I said. Actually, I started doing a little bit before, but this was a big warning sign. So, yep. Let's talk about gold and let's talk about silver. We've been saying it's consolidating sideways. In other videos, we say, hey, like everything's been coiling up. Everything's been going sideways, including the dollar, commodities, the equities were going sideways, and we're like, okay, something's going to happen. Don't know what's going to take place, but either to the upside or the downside, we're going to see some movement. And, well, we saw movement to the downside. So we broke down through the blue 50-period moving average, and we're heading lower here. That's scary for the price of gold. I personally bought into this, and I bought into it right here, too. I bought 1 ounce here. I bought another ounce today. Yes, I'm paying above spot price. I had to pay a premium because I'm buying the physical metal. And when it comes to gold, I want people to understand this because there's a lot of traders that say, oh, don't buy gold, it's going lower, which I don't care if it goes lower. I personally want it to go lower because then it gives me an opportunity to move into a position. I bought silver with premium at $15.50. So I'm already in with a lot of gold and silver already at a very low level. And I don't mind these pullbacks because I'm still net positive on this trade and I'm long-term bullish, okay? But this is what I want people to understand about gold. And we're looking at the GLD, right? So I'm talking about the physical metal, but the chart is very similar. So when it comes to the physical metal, when you buy 1 ounce of gold, I want you to understand this. 1 ounce of gold will always be 1 ounce of gold. Thus, when you buy an ounce of gold, there is zero risk because you are trading your currency for a hard asset or hard money. So 1 ounce of gold, when you own that 1 ounce of gold, it's always 1 ounce. The dollar can go up, the dollar can go down. Things could change in the world. Your 1 ounce is always 1 ounce. You have zero risk owning that physical asset. What you got to wrap your head around is the only thing that has risk is the currencies that are, that you measure the gold in. If you measure it by the weight, there is no risk there. But if you're looking at the US dollar, as the US dollar becomes more valuable, you can buy more gold with your US dollars. However, when you look at it as, well, my gold is worth less, that's not necessarily true. It means it's true in US dollar terms. However, when the US dollar rises, other currencies go down. So you got to understand the play here and the dynamic. Gold is real money, and it's an asset seen worldwide. That means you can trade gold for any currency in the entire world. So if your US dollar goes up, your gold is valuable in another currency. It means that value is rising. So take that into consideration. I feel like you got to measure things in terms of real money. So if you look at the median home price, I'm trying to figure out a chart on this, but how much did, a medium house cost, in 2000 or 1990s, and then how much was gold? So measure the median house price in terms of ounces of gold. And if you measure that over the course of time, you'll notice probably it's costing less and less gold or around the same amount to buy a median price home. That's important because the US dollars, it's costing more dollars to buy the home, but it's costing about the same amount of gold to buy that same exact house. Measure your wealth in real money. That's what I like to personally do, and that's why I don't mind buying the physical metal. I ranted there. Sorry. This video is going a lot longer than usual, and I got to be gone here somewhat soon. So yes, we're pulling back. I'm looking at around 164 to a little bit higher in terms of where that is on the price of gold. You have 1800 to 1815. That's my next buy zone. It could head lower. It can head to 1750. It can head to 1600. But there's still areas of support around there, and in bull markets, that is actually a healthy thing to see the prices go down. So I'm a bull fan. I'm a bull on gold, as you can already tell. But you know, if you don't understand it like that, if you want to trade it, if you want to do things differently, by all means, that's totally, you know, totally fine. SLV, this is silver. Silver's getting just, you know, hit hard. Silver's getting whacked around. We got a lot of volume to the downside, also trading sideways, broke out of that symmetrical triangle. You know, it's like gold, but it's taking a harder hit because silver, much more volatile, down 7.5% already, and we're closing right around the low of the day. Like I said previously, I bought silver with the premium at around $15.50 to $16 per ounce. That was with the premium, you know. So the lower this goes, I'm fine with that. I wouldn't mind getting into a larger position down by the 200 period, but I don't know if it's going to reach down there or not. We have the RSI right now moving into oversold territory, so people might just very well step up here very soon. Maybe we might need to see some strength in a candle, maybe a hammer candle or some consolidation. I guess we'll see, or basing out or higher lows. We'll see how that plays out, but coming down lower to around 17 to 18, that zone down there will bring the price of silver obviously down, the premiums down. So we'll you know, I'll consider potentially buying more silver at those type of levels. I like gold because it's a little bit less volatile in my portfolio, but I do like silver because, one, it's less expensive, it has more upside potential. I mean, looking at the price of gold when you've seen that it's already hit its high, and silver has a long way to go. So I'm trying to get it down here to buy into more. Obviously, we had a lot of air pockets that may very well be filled. So we'll see. Here is Bitcoin, and we had that 11.2 resistance level. We saw the breakout. We're like, hey, we got to recapture this and the 50 period in order to see some traction for the bulls. This right here, that does not look healthy. It looks like it wants to come back down to test that 10,000 range. So on the weekly time frame, this is the daily. You know what? Let's just pull up the weekly. On the weekly time frame, we had mentioned we might get a dead cat bounce here, and that's really what the dead cat is that's kind of what it's looking like. We saw this big drawdown right here. We saw bull flag on the daily, bear flag on the daily, and now we're kind of seeing it. We saw that bounce, and now we're seeing weakness overtaking the previous week's candle, bearish engulfing. What does that mean? Well, if we break down through 10,000, this pink box looks like a potential buying opportunity. Why would it be a buying opportunity? It would simply be a retest of this trend line that it recently broke out of. So by the 50 period and by this trend line, that's around 8,866 to about 9,500. That level right there could be a potentially step up position for the bulls. However, you know, overall context, we're in a symmetrical triangle, and we might very well test the low part of this trend line if we still keep getting downwards pressure. And the lower part of this trend line puts the price, you know, from 5,000 to 5,500. That has a lot of work for the bears to do, and you know, let's first see what happens over here, and then kind of determine where it might be heading next. Let's do that. All right, everybody, that's all we have today. Coco wanted to say bye, and for those that are still sticking around, I guess I'll end on this final note, and I feel like I've been kind of saying this frequently, but I've been tracking my weekly scan portfolio, and before I went into the weekly scan portfolio, I said, you know, pay attention to where the market currently is. It looks like we're going to be heading into an area of resistance, and this might result in a lot more stop outs. And what do you know? I got stopped out of a lot of positions, but I want you to think of this. What is more important? Okay, I hear people talk about this and people get misconstrued, if that's a word, right? It's a word. What's more important is being able to pick out winning stocks or picking out stocks more important than risk management, or is risk management more important than picking out stocks? And answer this truthfully, because you already know my opinion. My opinion is risk management is more important than picking out stocks. Why is it though? This is important to wrap your head around. when it comes to picking stocks, which anybody can do, okay, you know some basic technical analysis, you can pick out a stock. But there's two things to consider here. One, you have complete control of the stocks that you pick out. That's a good thing. But what you do not have complete control of is whether or not that stock moves up or if it goes down on your position. Okay, so you don't have control of what the market does with the stock. Yes, you use technical analysis, and yes, you can find great stocks, but you do not have control whether it goes up or down. With risk management, one, you can control how much you risk. So you have complete control of picking the amount that you want to risk. And two, you have complete control of how much you want it to go down or up. So, in short, risk management, you have complete control. Whereas picking stocks, yeah, you can pick the stock, but you have no control of the price action. So it's very important to focus your efforts on managing risk. I got stopped out on a lot of trades, okay? A lot of trades this week. I had one winning trade. Why am I up month to date if I'm losing on more positions that I'm potentially gaining? Well, one, the market is not reacting the greatest to these patterns. So I said previously on the previous video, I said, be careful on breakouts because they might just be fake. What do you know? They were fake. That happens because there's a lot of pressure, a lot of things to consider going on in the market right now. But I mean, I don't know the exact number, but I think probably, let's just say, you know, three out of 8 trades maybe were profitable for me, but yet I'm up for the last 2 weeks of trading and up for the month. So how is it possible that I only could get 3 out of 8 trades correct, but yet still be profitable? It's risk management. It's as simple as that. You monitor your risk, you don't get caught up in the emotion, and you manage your trade. You have to manage your trade and manage your risk. So don't worry about stock picks. Worry about managing risk. Worry about that psychology. You should feel good when you get stopped out. I felt good today getting stopped out on basically all my trades because when I looked at the account, I'm still doing fine. And on top of all of that, I noticed that the market was going lower and lower, and it looked like I was going to be getting stopped out. So I started looking for an opportunity to potentially short into, and that is that short trade that I looked at for the intermediate time trade. So it helped cover some of those long positions to the downside, although I was long. So you can take a trade on both sides and still make money. It's crazy. I love the stock markets, and I'm very passionate about it. That's all I have for you today. Let me know your thoughts in the comment section. Smash that like. I greatly appreciate it. Sorry today's video went long, and sorry I got yesterday's video out so late. Bye.